Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. As you can see, I have CNBC on in the background. Just got here to Atlanta. Just want to talk about a few stock that are underperforming. There is a chip sell-off, like I read the headline for you guys on yesterday, and it's like catching a falling knife. Now, I'm gonna play a clip for you right out of the gate, and then we're gonna discuss this, okay? No one knows what the future holds, but this whipsawing, too much CapEx spending, not enough, we need to be in front of China. It's just whipsawing from day to day. And in times like this, fear grips you, I understand, but Josh from CNBC brings up a very, very, very good point. There are some of you guys that are trying to get rich. You're not diversified. All of your plays is zero DTE and leverage, stock, just like SOXL, which we will cover today, which is getting beat down with the rest of tech, of course. And you don't have any type of balance. Your portfolio, even with today, your overall portfolio should look good. But there are some of you that are literally trying to get rich. You have none of the overall stock market. You just want the hot stock. And then you put all of your money into the hot stock. And you're not balanced, okay? You got United Healthcare did well. Don't have any of that, but everything is high risk, because you want the high reward, okay? So I just want to caution you guys on that, okay? We like to keep it balanced here. Let's go right and look at what we're looking at, okay? So as you can see, I got ticker symbol SOXL. We're going to start with it. I'm not gonna lie. I got 139 as my, I'm scared. This is like where I really want to set my stop loss. And we can see that it whipped under and it stopped. Personally, for me, I can't speak for anyone else. I want this stock, SOXL, to close above 139. Now, I got it. It's triple leverage. I know I talked about it on yesterday. But the truth be told, excuse me, just like I said, this is a triple leverage. So when it goes down 3 times as fast. When it goes up 3 times as fast. This was just a swing trade for me. We were going to buy the dip and sell the rip. So soon as a rip come, I am just running and dumping these shares and getting out, okay? Then we have here, sorry about that. We have it here. We could see it's down by 15%. And then for the week, still down by 23%. So year to date, though, we're up 234%. Why? It's triple leverage. So we want to be careful and not just have all of that in. Of course, I know one or two of you will, but that's on you, right? Ticker symbol DRAM, DRAM, okay? I like DRAM personally, and I plan on holding my DRAM because I have some at a really, really good price. So, this week they're getting beat up, and then next week or the week after, they could be running up a lot, right? It just depends on you pick what news media you're gonna look at, and everybody's gonna be negative on a day like today. Ticker symbol MU, SanDisk, and Nvidia. I just want to show you that the overall industry is selling off. So it's not just, hey, Larry, why is ticker symbol SOXL or DRAM selling off or MU selling off? It's the overall industry, guys. It's chips, period. It's AI, period. As a matter of fact, just take a look at the Nasdaq. The entire Nasdaq is tanking today, negative 423 points after a good Fed meeting. after a good a good CPI print, should I say, and after a good PPI print, right? So let's listen to this video and then we'll close it out.
JP Morgan had a note out about that this morning, saying that retail investors in particular are kind of following that trade with Nvidia, Tesla, and Microsoft leading the July buying here. Josh, you own Nvidia and Apple. What do you make of this rotation dynamic? How much do you think it has in terms of legs?
Look, you could take that JP Morgan retail radar and put it back in the envelope, and I can just Kreskin-like predict what that's going to say next week. I'll just look at what happened this week. I mean, there's no information there. It's not important. I think that the key to this market this summer is stop acting like a thirsty lunatic. No more thirst. We're grown men and women, and we need to comport ourselves. The thirst to own the it trade every second of every day. And it's not even enough to just own it. You need to own it 2x in an ETF, and that's not even good enough. You need to own it with a 0-day till expiration option. This is what's killing people right now. And if you're not playing that game, your portfolio looks amazing. The median semiconductor stock in the SMH is in a 22% drawdown from its own high right now. 44% of the SMH names are in a drawdown of 25% or worse. That's real money. These are big drawdowns, considering the fact that we're in an S&P 500 that's within a couple of percentage points of record highs. Imagine having put yourself in that position because of how thirsty you are. There are only 3 semi names right now that are even within 10% of an all-time high. Only 3. The rest of them have been knocked out of the box, and people they feel like, oh, well, I'll do the DRAM. DRAM's in a 34% drawdown. It's actually worse. Micron, 29% below highs. Western Dig, 36% below highs. SanDisk, a little bit worse. This idea that you have to be all in to whatever's working right this second is kryptonite for portfolios. I was talking offset just now. I know a guy that moved a multi-million-dollar portfolio just to get the SpaceX IPO, like broke a relationship with his advisor at a major bank, moved all the money to another advisor. I don't know, what did he get, 500 shares? Now it's below the IPO price.
He's locked up.
Stop acting thirsty. It's going to kill you in this tape right now. It is not the time for that. You missed that time. It was May, June.
Yeah, Malcolm, I'm curious what you make of that argument, and do you think that those benefits have all been seen and have all been priced in at this point?
Yeah, based on that, you're supposed to buy the rumor and sell the news, but we're right now seeing people selling the rumor because we haven't gotten the earnings to confirm whether or not that 27% growth this past quarter, from the S&P that we're expecting is actually going to come to fruition, or something even better. So I think it's odd. I think to the point that Josh is making, that folks aren't willing to at least wait and see if those trades actually pay off. Right? The response to Taiwan Semi's earnings, as an example, is extreme in comparison to what you would expect at a moment where just 2 weeks ago, everyone loved the semis, it seemed like. Now, where most of the earnings growth is coming from 3 semi names, right? You have Micron, Broadcom, and Nvidia that supposedly were going to save the day. We don't even know what those numbers will look like. ASML saying we're going to raise prices, and the market hasn't responded as negatively to that as they have to Taiwan Semi. Nvidia is saying we got to raise prices, and the market's not responding negatively to that today necessarily because they're almost at their all-time.
The earnings could be great.
So guys, there I played you both gentlemen because I thought what they had to say was very interesting. I agree with Josh, you know, and even I bought too much on yesterday, right? I bought too much on yesterday. I'm just going to be quite honest with you. Now, I have a balanced portfolio. I have 7 portfolios. Going to consolidate that down to 5. I'm doing fine. My overall portfolio, even with the red of today, is massively green, okay? My money movers know that. But even I got greedy on yesterday, right? And when it comes to ticker symbol SOXL, because it moves 3 times fast, let's face it, I told you guys what I was buying. You're responsible for what you're buying, but I caught a falling knife. But I looked at the technicals and I looked at what the inflation was telling us, and I made a calculated risk for myself. What about you? And I still believe that it will pay off, but you got to have a stop loss at some point, okay? But me personally, I can't tell you what to do. I'm holding on to my tech. I just believe that in a few days, they're going to be saying, we have to compete with China, blah, 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 blah. And then it's back on with the CapEx. Now, one of the gentlemen, the last gentleman, he said the most important thing, it's earnings, earnings, earnings. And while I'm filming this, Nvidia is going to be reporting, okay? I'm sorry, not Nvidia, Netflix is going to be reporting. That's not AI, but I'm going to wait and see what the earnings are like. What about you? Leave me a comment. But I just wanted to come on today. I may not be able to make a video tomorrow, and I just wanted to talk about where this market is and some of the moves that I've made on yesterday, okay? And me included, we have to pump our brakes on trying to get rich quick, okay? Now, normally you guys know I'm the balanced one. I go, hey, I'm not chasing that. I didn't get any SpaceX. We're gonna wait for it to come down. It's tanking. And even I bought too much of ticker symbol SOXL, all right? So I'm just gonna be transparent, continue to be transparent with you guys, but I beg you to have a portfolio that's well balanced. Of course, we bought United Healthcare. We bought it when it tanked, and it's been red for a long time. Now it's been green for a while, and now it's coming up, okay? So when you hear about this rotation out of tech, then one of the places that's kind of safety into rotation is healthcare. It's boring, yes, I know, but have a balanced portfolio is my message, okay? I may or may not see you tomorrow, and make sure you check out the links below, and we will see you later. Live, love, laugh, and learn.